You're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. Let's take a look at how the markets are faring at this hour. Sharp cuts coming in on the Nifty index in the last few hours of trade, down about 61 points or about 0.6%, and that's probably to do with the sharp cuts that we have seen on the Dow futures in the last few minutes of trade. So the Nifty trading at the lowest point of the day at this point in time. On the other hand, the mid-cap index, if we can pull that up, that would also be probably showing a similar trend, down about 0.3%. The small cap index, however, has continued to remain in the green. I'm not sure if that'll hold on. It's just up about 4 points at this point in time, but nevertheless, that outperformance from the mid cap continues. This is the Nifty heat map. You have SBI, which continues to fare well for the second straight day after reporting that second consecutive quarterly loss, but big gains coming in. Brokerage is giving a thumbs up. Cipla is another one which surprised with respect to earnings, but trading in the green. And of course, in the last few minutes, this entire color has changed. You have more red on the screen than green. Just about half an hour back, the advances and a decline, the losing and the gaining stocks were more or less equally distributed. We're also seeing OMCs under tremendous pressure. You have HPCL down about 6%. You have BPCL, IOCL, all of them continue to trade under severe pressure, especially after the disappointing numbers from HPCL yesterday. Gross GRM, the gross refining margins came in much lower than what was expected. On the other hand, the overhang of price hikes and the rising crude oil prices will weigh on some of these names. Vedanta, of course, on the back of that Sterlite copper smelter issue is continuing to trade about 5% lower. So overall, the market breadth continues, or has rather weakened in the last few hours of trade. If we look at the Nifty contributors, what's pulling the Nifty down as much as 64%? If you can bring up that Nifty contributors chart, there you have it. You have SBI, which is adding about 10 points. ICICI Bank is also faring well on the back of that. These two are the stocks that are actually also driving the bank Nifty index today, but heavyweights like Reliance and ITC weighing on the Nifty index, as is HDFC, Tata Steel, and you have Tech Mahindra and L&T, which are among some of the gainers. But overall, the market breadth has actually turned right now, because just a few minutes back we had more of advances and declines, but now that has turned the other ways round. About 7:8 is the kind of advance decline ratio that we're seeing at this point in time. But Darshan, what's happening on the F&O side?
Yeah, so basically, if you're looking at it, the Nifty futures are now trading at a discount. If you're looking at almost a 10-point discount, initially at the start of the day, it was a premium of almost 15 points. It's moved to a discount of almost 11 points at this point of time. No doubt, fresh short positions are being taken. Now, we've been speaking, the 10,500 seems to be a very, very important level that was breached. And, you know, any closing on a closing basis, if the Nifty closes below the 10,500 mark, you know, there could be more trouble that's going in. Now, if you're seeing where the open interest build-up is today, at the 10,500 level, 16 lakh shares have been added in open interest. On the 10,600 level, what we are seeing is the fact that another 7 lakh shares have been added in open interest. So the bears are getting much more confident, but at the same time, I'm not seeing any kind of big cuts that are coming in either on the 10,400 put or the 10,500 put. So that gives a bit of confidence that the bulls do believe that, you know, at least in the near term, you know, they will be able to bounce back from the 10,500 level. Where is the total open interest currently? Maximum on the 10,500 put currently. I'm ignoring the 10,800 call, but there is significant amount of bulls which are betting on a reversal. So if 10,500 now gets taken comprehensively, it's just some 20-30 points down. But if that gets taken comprehensively, there will be more selling pressure that will come in on the Nifty. Now, individually, some of the stocks that you need to watch out for. There is basically SBI, which is seeing high open interest build-up of 24% on the long side. So that is the only one that is keeping the Nifty afloat by almost 10 points. Without that, the Nifty would have actually seen much more selling pressure. IGL has seen open interest build-up of 23% on the long side. Tata Steel has managed to fall significantly, open interest build-up of 22% on the short side. There is Ramco Cements, which just came out with numbers. weak set of numbers and open interest build up of 18, 17, 12% on the short side. And watch out for the oil marketing companies and Balrampur Chini. These are the counters which are seeing heavy short positions that are being built into themselves at this point of time. So that's what I'm watching out, Shraddha.
All right, now let's get you a market voice. Aveek, Mitra, the founder and CEO at Aveksat Financial, joins us on the show. Good morning, good afternoon, Aveek, and thank you very much for joining us. How are you approaching the markets this afternoon? The benchmark Nifty, of course, trading at its day's low. What's your view there?
Good afternoon. I think in this market, basically for people like us who invest in the range of 200 to 5,000, 10,000 crore market cap kind of companies, activities are pretty limited. We don't want to really bet on the market at this point of time, but at the same time, we are investing in the areas where we feel we are comfortable about 2-3 years time frame. So I may not be the right person to talk about the regular flows of the market, but at the same time we were having a bearish stand in the market since February onwards, and to our members we have given a lot of sell calls on the stocks which we are owning, and we are gradually buying over a period of time, very slowly, and like others also we are down in many stocks. So in market this kind of situation comes every 1-2 years, and we have to bear through this period. I think that is how I look at it.
Here, you've given your views on 3 stocks: Sundaram Finance, TBZ, and Greaves Cotton. Let's take them one by one. Let's talk about Sundaram Finance Holding. What do you like about this company?
Actually, Sundaram Finance Holding has recently been demerged from Sundaram Finance Limited, because Sundaram Finance wanted to ring fence itself from all other businesses which are not related to the financial services. So all the auto related stock holdings of Sundaram Finance has been demerged into an entity called Sundaram Finance Holding. Now if you look into this company, this has got 3 companies which are in the listed space. One is Sundaram Clayton, other is India Motor Parts, and the third one is there's another company which is in the listed space, and apart from that there are companies like Break India, TVS Lucas, Dunes LLC, Axles India, Flowmet Lake. These are all very profitable non-listed entities of TVS Group, which actually forms this holding company, and this has got a also running business of a BPO service and also financial services areas BPO which operates within the TVS Group into this company. So they have a small base business which we expect to grow, and at the same time these holding values of these companies are substantial. So the consolidated profit which came into the books of 17 was about 93 crore. Now presently this company is having market cap of about 2,100 crore, 52% owned by TVS Group, 26% directly owned by Sundaram Finance. And this kind of markets, we are looking for areas where there are very low downside. So from that perspective, we actually have looked into this company and made some investment. These are not recommendations, but these are the areas we are looking into.
Aveek, another stock that you have spoken about is TBZ. That stock is corrected by a good 20-25% in 2018 itself. So what stands out in TBZ, especially when the sentiment towards jewelers have turned foul?
Yeah, as I said, the sentiment for the short term is always a question. So we really are not too much focused on that particular thing. What we found interesting in TBZ is that TBZ was a laggard for so many years now, and they were not been able to perform. But over last 1 year, we are seeing that gradually this company is changing its course, trying to increase its footprint, and those results have started slowly coming into the numbers. If you have seen the numbers of the last 2 quarters, there is a gradual improvement in same-store growth, same-store sales growth. There is a gradual improvement in inventory turn, and also this company is trying to get expansion mode through franchisee route in Tier 2, Tier 3 cities. Now, this kind of TBZ is a player which has got a strong brand in the West, and also they are having a reasonably a strong presence in the wedding jewelry segment. And now, if few changes happen in this company, like if through franchisee route where there is a gross profit revenue sharing model which plays out, and if the same store sales growth increases a bit, if there is an inventory turn increase which can happen through the franchisee based rollout, we can expect it to have a better ROC over a period of over 2-3 years time. And at the present valuation, we found that there is nothing much to lose in this company, though we are fully aware that the sector itself has got a kind of a derating because of various factors happened in Gitanjali and PC Jewelers and stuff like that. But keeping a structural change in GST enabled environment, number one. Number two is that there's a hallmark of gold, and number three is that people's interest in getting into areas where you can have a branded jewelry design stuff. And lastly, if the company can increase the footfalls and reduce the ticket size, because the ticket size of this company's products are quite high. So what we made to understand over over last 1 year through the con calls and management interactions, that they are planning to change their strategy to increase the footfall, increasing their presence in different sectors and different cities, and gradually bringing the business in line, which we think can be positive. And based on this valuation, we thought we can put a weight out here.
That you spoke about is Greaves Cotton. What do you like in this one?
Okay, Greaves Cotton is, again, we were telling that we are primarily focusing on areas where we find there is a safety of capital. And Greaves is a company which is an undisputed leader in the single cylinder three-wheeler business, and which is a structurally slow growing or even negatively growing business. So we don't think there is a much opportunity in that. But the good part of this company is that they're gradually changing, and this change is happening through 3-4 factors. One is they have developed a fuel independent powertrain which can be used for diesel, CNG and petrol. Second is with the BS6 implementation, the kind of engines which will be required in the three-wheelers, they are in a position to develop that product faster than competitors. And third thing is the power tiller business, which we think that there is a huge scope, because in India the power tiller market till now is about 500 crore, and in a country like Bangladesh the power tiller market is almost 400 crore. With small holding size and increasing farm labor cost, there is a possibility that power tiller business can see a good growth. And also with this hub and spoke model post GST, there will be a good demand for goods carrier in a LCV side or three-wheeler side, where these engines can be used. And as well as when the city metropolitan metro development and increase of public transport needs a support system through bigger penetration of three-wheelers in the areas of last mile connectivity. And keeping those in mind, this company is having a better engine which is BS6 compliant, number one. They have developed new engines with collaboration with Pinnacle Energy, and third is they have also come out with an EV engine with Altigreen. So these are the possibilities which gives a kind of hope for the future. Presently the company have 4% dividend yield, ROE and ROC, as well as return on incremental capital employed, as too high compared to others who are having a premium compared to Greaves because of its lack of growth over previous few years. So we feel going ahead, we have not much to lose in this particular area.
All right, Aveek, another sector that is really outperforming today and stands out is that entire Nifty PSU bank. Just your broader call on PSU banks, especially after SBI results. Do you think that this NPA cycle has bottomed out? Do you see any value buys here or resolution plays?
PSU stocks we have never in our career have ever bought simply because that we do not understand how the PSU bank's management is aligned to the interest of the minority investors. So this is a broad thesis on which we never have invested in any PSU banks, and we really don't try to seek to do any bottom fishing in this kind of areas. Rather, we will look into other areas where we have a clear visibility and understanding. So in a word, no, we have no view on any PSU banks, even though there is a correction or there is a change.
Okay, Aveek, many thanks for giving us a perspective, and thanks for joining us on Bloomberg Quint. Okay, moving on, it was a robust fourth quarter for L&T Technology Services with growth seen across the board. Let's discuss some of the key factors behind the performance with MD and CEO Keshav Panda. Also joining in on the discussion is Yash Upadhyay from the research team. Yash, take it away.
Thanks for that, Darshan. So first up, let me start off with asking you about your top line. That has grown by 30% on a year-on-year basis. Can you give us a breakup of which were the geographies that have done well, and where is this growth coming in from?
You know, before I start, I'm very happy to say with you, we had a very strong year, a strong quarter as well as strong year. We closed the quarter at $162.4 million, and which is a growth of 34% year-on-year quarter. And our revenue for the year is $580 million, which is, I think, a growth 20% year-on-year. So this is the industry-leading growth what we achieved this year. That is one point. The second important point, if you have to note that, I think in technology side, our digital engineering as well as the new age technology, that has done very well. Today, 26% of our revenue comes from this area. This is almost double from last year to this year. And there's one more, if you go a little more, if you look at it, 20% growth, 17 to 18, and we have a visibility of doing 16% growth FY18 to FY19. So even FY19 looks very good. The growth has come overall from every segment. All the segment, 5 segments we have, every segment has done very well. So all the segment has grown, and every geography has done well. North America, as it is always leading the growth. North America has grown well, and Europe and rest of the world, every geography has done reasonably well.
So on to your margins now. They have come off a bit on a year-on-year basis. Just wanted to understand, what are your plans with respect to getting them back to the levels of 18-19%?
I think we have improved margin from last quarter to this quarter. As you know, we closed at 16.1. We are in a journey to, and we see there is a possibility of growing few basis points every quarter on quarter. When you do what happens is when you take a large deals, when you get a large deals, usually the on-site segment is high. That reduces your margin. So I think we are in the path to get there, and a matter of time, few quarters, we should be able to get there.
So can we do 18 or 19% kind of margins in this financial year?
Listen, I think one thing I can tell you is that we are able to, I have given a guidance for the top line growth, and bottom line, we did quarter 3 to quarter 4. Our EBITDA has grown from 15.3 to 16.1. And our net profit, if you see net profit quarter on quarter, if you see quarter Q4 of last year to Q4 of this year, PAT has grown, 66% has grown. And then, if you see year to year, we closed the year and, net profit at 506 crores. That also has grown substantially from last year to this year. So the profit margin has gone up. And when you say EBITDA, there are multiple parameters there. We have increased from Q3 to Q4. And we, again, what I can see is, I don't comment anything on the year, but I can only tell you that quarter on quarter, few basis points will continue to grow. That visibility we already have. The action plan we drew last year, a few quarters ago, and that is paying us, and this will continue to, impact the margin in the positive side.
And what does your order book stand at? Can you give us more visibility in terms of the expected order inflows in this financial year?
You see, I did, order booking, looking at order booking, and that season we did, I said 16% growth FY18 to FY19, and I have a good visibility FY20 as well. So I think unless you have a strong order booking, we will not be able to predict the FY19, FY20. So I think we have a very strong order booking. But one thing sure though, we made a decision that we are going to focus on customer who are spending $1 billion plus engineering R&D. And that I think is a big differentiator. And the growth, if you see top 30 customers today has done very well, which contributes almost 67 to 68% of revenue. That has grown from FY17 to FY18, and that will continue to again grow next year. So if engineering, and when you, in an engineering sense, when you look at it, it goes through a process. You get a project, a small project, then you try to scale. And the biggest asset we have is Larsen & Toubro Technology Service, L&T TS, that 48 of top 100 R&D spenders they are our customers today. They spend $1 billion plus in R&D. So I think this is an asset which we mine reasonably well. I think we should be able to, without worrying about order booking here and there, and that is the biggest asset we have. And that has given us growth last year to this year. We will continue to grow FY19, FY20.
Okay, and so the rupee, that has depreciated by over 6% on a year-to-date basis, and you have a sizable exposure to exports. What steps are you taking in order to hedge yourself against forex risk?
Yes, we do that. We have a policy, a hedging policy. We do that with our treasury department every time we talk about. It's a dynamic situation though. What we do is this year, FY19 we hedge X percentage. We did that in FY17 or FY18. Now FY19 we have hedged X percentage, and we continue to do that. Look at the movement and look at the political situation. Look at our treasury department on what could be the movement of dollar to rupee, and we change that accordingly. So hedging is a big part of our business. We continue to do that. We have been doing it that season. If you see, the other income, hedge income, is always substantial for us. Last year, and also continue to be this year and subsequent years.
Okay, and so finally, if you could leave us with what is the expectations in terms of what is the outlook for FY19?
FY19 outlook is that we are going to grow top line of 16%, okay, year on year. 18 to 19 top line is 16% growth is what guidance I can give you. And on the bottom line, I can only tell you that we continue to increase few basis point quarter on quarter. I will have more visibility once I come to Q1 on in terms of number, what percentage we are going to close. We'll have more visibility by end of the next quarter. And one more point I want to leave with you. If you look at it today, today if you see the growth happens more on the new age technology, digital area. One important point is last year to this year, our digital engineering plus the new age technology areas today contributes 26% of our revenue, which is almost double FY17. So this area is going to grow 26% from last year to this year, and so next year is going to be bigger than 26. So this is an area again, a growth area for us.
Okay, well, thank you so much, sir, for taking the time out and speaking to Bloomberg Quint. Well, that is the management of L&T Technologies giving us an update about their Q4 results. Back to you, Darshan.
Thank you very much, Yash. Not surprising to see the stock react positively the way we are, 6-7% upside on L&T Technology. But what's not doing well is Vedanta. Now that stock is down over 5% today as tensions continue to rise around its subsidiary. That's the Sterlite Tuticorin plant. Now the Madras High Court has now stayed any expansion plans in the area, and the plant cannot resume production till the State Pollution Control Board has given its go-ahead. Nikki Mirchandani joins us now with the details. Nikki, of course, it cannot be any good news for the stock.
Right, Shraddha. In fact, it's tough time coming in for the company. Madras High Court has stayed the Tuticorin expansion plan, which means that the operations of the company, which was shut down, will continue to be remain. This shutdown will be extended. Initially, the shutdown was back in March on account of the annual maintenance activity, which was being taken. But then now, clearly, Madras High Court will hear the plea next by September 23rd. This is after the mandatory plea will take place after the PIL has been filed against the company. This is after Tamil Nadu This comes on the heels of Tamil Nadu Pollution Control Board, which is yet to give any kind of environmental clearance for this plant expansion. If you look at the copper division contribution in terms of the overall EBITDA that we saw for Q4 18, that's almost 5.6%, and the sales volume is almost also saw a 2.9% kind of a growth quarter on year-on-year basis quarterly. What Kotak has to say on this says that EPS for FY19 or and FY20, however, is expected to be unchanged on account of this event, clearly because the expansion was expected to take place only after FY20, which means that the benefits would have started percolating in after 21. However, in case where the plant is completely shut down, we're expecting a 6% kind of earning impact, given that 2 to 3% of your full year EBITDA comes in from the copper division. Back to you.
Okay, Grasim has come out with its numbers. Standalone net profit at 373 crores versus an estimate of 504 crores. That's the number I'm getting at this point of time. Let's see, the counter has managed to react positively, now moving into the negative territory. Revenues at 4,600 crores versus an estimate of 4,270 crores. So not the best of numbers that have come out from Grasim at this point of time. So clearly there seems to be significant amount of traction. But I think the main story is the markets itself. It's falling significantly in trade below the 10,500. Nifty futures coming in close to the 10,460 mark. The big story is SBI and how it has managed to react in trade, and the other big news is how the oil marketing companies have reacted to trade. HPCL down 8%, BPCL down 6%, IOC down 4%. The other counters are the metal counters, which are seeing a lot of selling. Tata Steel, Vedanta is down in trade. Surprisingly, Bajaj Finance is down 3.5%. It's run up significantly. Dr. Reddy's is cracking in trade. So it's been a rather weak market for today, but let's get in a fundamental view. Independent investment advisor Sharmila Joshi joins us in the studio. Hi Sharmila, what do you make of the market move, especially in terms of the metal stocks? 4 to 5% decline in Tata Steel, Vedanta. Do you think that the rally that they had is over and there could be persistent weakness going ahead?
Perhaps for a little while more. I'm overall still positive on metals as a space, but I think the changing dynamics of this trade war have seen that this has become a slightly volatile sector over the last 2-3 months. So whether there is actually any sort of a standoff between China and US, hopefully India should sort of emerge from it unscathed, but I think that remains to be seen. So in the near term, you could see some more maybe concern building up there.
All right, on that note, let's bring in our technical guest, Ruchit Jain, the technical analyst at Angel Broking, also joins us on the show now. Good afternoon, Ruchit. Thank you for joining us. Any view that you have on OMC's HPCL, especially after weak numbers yesterday? We're seeing a fair bit of corrections, plus there remains an overhang of the price changes. What's the chart looking like for HPCL?
Yeah, hi, very good afternoon. Well, if you see the positional charts, then if I just look at the historical data, then post mid 2013, all these three OMCs had started a significant run up. Till October 2017, without any corrective move, we had seen a run up almost within the stocks, almost I think almost were three times of what they were during 2013. Then usually after mid October 2017, we had seen a formation of low top, low bottom structure on the daily chart, which indicates that these stocks since last 6 months are now in a corrective phase. We are expecting some more correction in this space because this low top, low bottom structure is still getting continued, and even if you see in last few days of trading sessions, now the volumes on the sell-offs has also started increasing. So this is usually the phase wherein every pullback moves are getting sold into. So I think one should not be in a hurry to do any kind of bottom fishing in any of the OMCs. The pressure could still be there. Even if we see HPCL, then the supports are still far placed around 245 to 250 range, where weekly 200 DMA is there. So I think these stocks are still, this stock should show further correction from current levels also.
So what about your view on the index as such, the Nifty and the Bank Nifty? The Nifty Bank has managed to slip into the red at this point of time. It was up almost 100 points. Your overall view on the market?
As we see during last week, when the Karnataka elections outcome was there, Nifty as well as Bank Nifty daily chart, we had seen formation of a reversal pattern, and post that continuously markets are under pressure. Since last two trading sessions, 10,500 was a very crucial support zone for the index, not only in terms of technical support where 89 EMA was placed, but also in terms of derivatives. If you see, then 10,500 put option had highest open interest since the start of the series. In today's trading session, this 10,500 support has been breached, and also the call option of 10,500 is now attracting a good amount of open interest in today's session. So I think this is somewhat negative that the supports are getting breached. So this, I think, should lead to some more liquidation of the long positions, and we should see levels, lower levels around 10,350 to 10,400 in near term. Even the Nifty mid cap index, the down move from the last couple of weeks is clearly an impulsive down move. So we are expecting this mid cap space to correct further from current levels. So as of now, the trend continues to remain negative, at least the short term trend, and we can expect levels around 10,350 to 10,400 in next few trading sessions.
Ruchit, I believe you also have a sell call on Jindal Steel. I believe a lot of the steel companies are itself trading under pressure today. What would your stop loss and target be?
Most of the metal counters, not only today, since last 3-4 trading sessions, they have already been correcting. Jindal Steel was one of the stock which was in a consolidation phase, and the recent low of 232 to 234 support has been breached today. So now, usually when such supports gets breached on any pullback move, they then act as a resistance. So I think the stock should test its 200-day moving average on the lower side. So one can go short at current levels or any bounce back move up to 233. Keeping a stop loss below about 242, expecting target around 210 in this expiry itself. I also have a sell recommendation in Bharat Financials. Although this has been one of the outperformer stock in the recent past, but the daily charts depicts a breakdown from our rising wedge pattern, which is usually formed at the end of an uptrend. So I think although the trend does not change over here, but we should see a corrective move within an uptrend in next few trading sessions. So we also have been recommending to go short on Bharat Financials at current levels, keeping a stop loss above 1160 and expect target around 1095 to 1100.
All right, and you have a buy call on Tata Elxsi.
Yeah, mid-cap IT space specifically has attracted good volumes in today's session, and also this space has been one of the outperformer. In spite of the corrective move in the broader markets, we have not seen any significant correction in the mid-cap IT space. Tata Elxsi is one of the stock which since last 2 weeks have been consolidating after an up move. So the momentum readings which were in overbought zone earlier have now cooled off, and I think this stock should show some outperformance irrespective of the corrective move in the market. So one can go long, take a contra call over here. One can go long on Tata Elxsi, keeping stop loss below 1160 for target around 1285.
Okay, we'll watch out for those stocks. Sharmila, the oil marketing companies are down in the dumps today. HPCL is down 10% in trade today. Anything that catches your eye? What exactly happened? Obviously, the numbers were not as bad as it seems, and now they're getting the rate hikes also in terms of fuel price. What seems to be troubling the oil marketing companies?
Well, I think it's obviously, the fact that they could be having to share the burden, because, it's all over the news today that if you're looking at a cut in either petrol or diesel, and you're asking the oil marketing companies to share that burden, that I think pretty much takes away, all the good moves that we've seen in this space. Because at the end of the day, one of the reasons why all these companies got revalued was that you saw this you rather thought that they would be allowed to manage their business in an autonomous way, and if that gets taken away from them again, then we are back to where we started, which is never a very good situation to be looking at. So I think that unless some clarity emerges on that front, we could continue to see pressure on the space.
Okay, so we'll watch out for the oil marketing companies. Hadrien Mendonca also joins us on the show. He's a senior technical analyst at IIFL. Good afternoon, Hadrien. Overall, the trade setup, the Nifty coming to a day's low, and the Bank Nifty has also managed to inch into the red now. Are we going to see, is this a full-fledged correction, or can we expect to take a bounce back from these levels?
Yeah, hi, good afternoon. Things are getting a little, worrisome on the charts. Actually, the bearish engulfing pattern that we spoke about early in the week is really seeing a follow-up sell-off that we're going through at the current juncture. There was a lot of hope that was created after yesterday's doji, kind of a pattern or the halt that we took from the, 5-day consecutive, sell-off that we saw. But I think all the hopes are crushed at the current point, and a close below the 10,475 mark would actually confirm another consolidation breakdown on the hourly chart. We're seeing another 150 points downside if we do manage to close below that 10,475 mark going forward. A long position should be very careful, do not get over leveraged. In fact, if you do a constituent check once again on the Nifty, you have the HDFC twins, you have IndusInd and Kotak, you also have Reliance Industries. So when all these leaders are leading from the front on the downside, it's going to be difficult for the markets to move higher from here unless we see some kind of recovery in these stocks. Even the trending ones, Bajaj Finance and Bajaj Finserv, both these stocks are also witnessing a little bit of profit booking. So surely there is signs that we may see further weakness going forward here.
Hadrien, I believe that you have sell calls on NMDC as well. Again, the stop loss and target price there.
Yeah, so NMDC is one of those stocks that have given a fresh breakout on the daily charts, and I think further weakness without a doubt is here to stay. So one can actually short sell NMDC May futures and play for a target of 108 with a stop loss at 114. The second stock that we're bearish on is an Axis Bank. The Bank Nifty is also showing equal weakness. If you leave out the PSU banks, sector, I think private banks are really under pressure here, and Axis Bank would also follow suit. And I think one can short sell Axis Bank May futures for a target of 510 and play with a stop loss at 526.5.
Some numbers on your screen. Kolte Patil, net profit 21%, revenue up about 43 odd %. I believe the margins would have stayed steady or just come off a bit because 52% uptick in EBITDA. Maybe there's a below the line operating number miss or thereabouts, because the operational picture seems to be okay on a fairly decent revenue growth. The bottom line picture not as strong as the top line, so arguably something below the operating line which would have not worked in favor of the company, maybe interest expense or otherwise, but certainly looking slightly wobbly on the bottom line growth compared to the top line growth number. Kolte Patil, down about 1.5% in trade. You track this one, Sharmila?
No, but I was just thinking of Soba Developers, whose numbers we saw the other day, and that also that looked like a fairly decent number. So the point being that some of these cities away from Mumbai, they seem to be seeing a better run, because I think Kolte Patil is also sort of focused more on the smaller cities in Maharashtra. Soba has a reasonable presence in Bangalore and a lot of the southern cities. So obviously I think the markets there seem to be more flexible and to pricing, and there the sales actually seem better than what we've really seen in Mumbai and some of the other larger metros.
Okay. Neeraj, have a look at, I'm just interrupting, have a look at Century Textiles. Ever since the deal was announced, counters corrected 25%.
Wow.
So I think I think the market was very optimistic, and Century was always in the news, and it had moved because of some deal that would come in. People always anticipated either they would sell the paper division to someone or sell the cement division to either Grasim. I was very surprised because the market also thought of Grasim because of the CCI issue. But I think valuations was not right for I think Century. I think it went in favor of Ultratech, and there's heavy selling. It's down 25% from the time the deal was announced. So Century is one counter, and I think now it will be a pure real estate play. Sharmila, any view on Century Textiles? Do you track it?
So, very honestly, as you said, when the stock used to go up, used to always wonder that what is it that's cooking, because obviously even if you valued its cement business or paper business or real estate, it didn't seem to justify the kind of price that market was giving it. So I think precisely, it's that old adage that sell on news sort of this. So once the deal is there, suddenly you see a lot of selling on the stock, and obviously the momentum guys are also staying away. But also I think the larger concern is on a lot of mid caps, which were momentum mid caps, which were doing so well and are now hitting low. So I think that's it's a larger point, but it's a worrisome point for market as a whole.
Right, since we are talking about cement stocks, Sharmila, do you track Grasim? Because we saw the numbers, a big miss as far as the bottom line is concerned, despite a strong revenue growth coming in. So it's mostly to do with some pressures as far as the operational level performance is concerned. Any view on Ultratech? So
I was just reading the headlines, and it seemed to suggest that there could be a one-time loss. So I think we need to just get a little more details, because as you said, the headline numbers seem pretty okay. So we should just get a little more details on those numbers.
All right. So the stock actually did dip a bit when we saw those numbers come out, but it has gone back into the green. So we'll get more on that. But any thoughts on the cement pack overall? What do you like at this point?
In fact, the numbers were, I think, better than what I was expecting, for most of the stocks. So I would be a little hopeful, given the fact that 2019 is an election year, and if you see a little more spend coming on construction as a space. I think this is a theme we've discussed earlier. If you remember, there was a Bajaj Electrical conversation,
yes.
And they're getting orders because they're seeing some electrification for villages, etc. And I think similarly, road building could see another boost in the coming year, because these are the visible things as far as the 2019 election front goes. So I would be actually, and the sector as a whole has managed to sort of withstand the pressures of pet coke prices, etc. So I think that perhaps hopefully this year will be a better year for them in terms of both pricing as well as demand.
We've taken the fundamental view. I don't know if you guys have taken a technical view or no, but OMCs, by virtue of the kind of fall that we've seen, and I heard Sharmila say this, the market's presumption about the companies having to bear a part of the losses. We don't know it as yet. I think a number of times these conversations have come about that at some point of time the companies will have to take it on the chin, or will have to take it on the books.
Yeah.
It hasn't happened thus far.
Yeah.
Sure, there are rumors, but based on rumors and oil price hikes, the stocks are now available at what? I was looking at the HPCL P multiples. It's available at 6.5 times.
Yes.
FY18 earnings estimate 6.5 times.
And actually, if you heard the management today, I think the management was very articulate on a whole lot of issues.
Yeah.
So it gave you a lot of comfort. So I think the only point of discomfort is really this, that if you go back to that situation where you are asked to bear the burden.
Yeah, the question mark only is what happens when crude goes back to 70 or 65, if it does indeed. But that's one argument which we can't really figure out. The other part is the trading argument on these stocks. And Hadrien, I want you to come in on these HPBP IOC for somebody who say had a whiff and went short on these stocks early in the morning today, is sitting on some profits, is a short-term trader but not necessarily a day trader. Would you recommend taking money off the table?
Absolutely not. In fact, IOC is a stock that is looking really weak, and if anybody would be short, I think you should ride the momentum. Trend is your friend, as you should not try to fight it. So currently the overall trend for these HPBP and IOC are all looking downwards, and I think you should continue to ride the trend. So don't take your profits off. Continue to ride it, and maybe tomorrow we'll have to take a decision on whether to take or not. But currently, absolutely no. Do not sell.
Okay, one other counter which is clearly buzzing in trade and has to be the stock of the day is Minda Industries, 15% up post a stellar set of numbers. Neeraj, the management, you spoke to the management, what kind of outlook did he actually give out?
Yeah, so, for an auto component major to on that base, now an increased base, to say that 20% CAGR growth, top line, bottom line, and they're merging their airbags business, TD Minda or something it's called, into the business, which will also aid bottom line growth. But net, he just seemed confident that with the 75% to 90% capacity utilization across different manufacturing outlets that they are well set for growth 20% CAGR growth for the next 3 years at least. And that's a key thing. I think promoters in the last quarter have bought back some of the shares as well from the open market. Probably shows the confidence that the management has in the business. And if a company on that base is able to give a guidance of 20% CAGR growth, maybe that is something that the markets has liked. Margin performance too, by the way. They clocked in 12.5% in the quarter, and they said that they are very hopeful and wanting to have a 12.5% EBITDA margin for FY19 as a year. So on enhanced margins, maybe the bottom line growth could be better as well. Looks solid, 14% higher.
I think the airbag story could also be interesting because I think there are a lot of new norms coming which will sort of make it compulsory for every version of the car to have an airbag. Because I think earlier only the higher end versions had it, or not all seats had it. But I think these new norms that will come in will mean that anybody in the airbags business is automatically likely to get better business. So the market always has these eyes on these small side stories as well. So I think that could easily be another factor which the market has liked if indeed he said that they're merging that with the
that process is underway.
So I think that also could be something that market's given a thumbs up to.
Any view on, let's ask a technical, Hadrien, any view on Tech Mahindra? I'm really surprised. I'm just seeing the YTD returns. The Nifty is down 1%, Tech Mahindra is up 40% on a YTD basis. So it's trading at the day's high. It's doing extremely well. What does the charts indicate?
I think that the returns part would get even more further higher from here. So the returns could be anyway close to 45 to 50% going forward. So that's the kind of breakout that we're seeing on a Tech Mahindra. In fact, the breakout has come today itself. And if you see the volumes, and the accumulation during the consolidation phase that we saw in the past 3 to 4 weeks, I think it is a clear indication that Tech Mahindra could be one of the winners going forward among the IT pack. Not forgetting, others like Mindtree and Tata Elxsi as well. So all these three stocks, really are looking good on the charts and, should continue to play the uptrend over here.
All right. Sharmila, Cipla is one stock, of course, which is faring pretty well today. Quite surprising to see that despite the kind of numbers that we saw yesterday. We've also seen a weak set of numbers coming in from Dr. Reddy's. Taro, so far the Sun Pharma subsidiary numbers were slightly better than expected, weak but better than expected. So Sun Pharma, of course, should be out with their numbers in the next few days. But overall, what do you like in pharma at this point in time?
See, I like the larger cap companies, but I think the whole problem has been that, at one point in time, you thought they were recovering nicely and that, you could also sort of see the IT story getting repeated there because this again has been through its share of consolidation and troubles, etc. And now you are getting signals that a lot of US FDA issues could be getting sorted and so on and so forth. But unfortunately, we have seen a sell-off in that space. So I would really hold my thoughts, judgment and whatever buy calls on that, because if you are going to get lower levels, you may as well buy it at lower levels. Though I must admit that I like all the larger cap stocks like a Dr. Reddy or a Sun Pharma, etc.
All right. Thank you very much for all your thoughts, Sharmila.
Thanks for joining in today.
All right. It was, as Cipla is doing well, it has also been a strong fourth quarter for music broadcast. What contributed to the strong numbers this time around? Let's ask the management. Joining us on the show now is the director, Apurva Purohit. Thank you very much for joining us. Pleasure to have you over. Now, for FY19, do you see margins at the current levels, and do you think that the government business contribution towards your operating performance in Q4 can rise?
So as you can see from our numbers in quarter 4, we've delivered margins of 36% and a growth of 14% year on year. And therefore, what it suggests to us is clearly there is a rebound in the economy, because these kind of growth numbers, I don't think we've seen through the course of the year. So that certainly gives us a lot of optimism for how FY19 will be. In fact, margins of 36% and annual margins of 30% 33%, which are better than what we had guided at the beginning of the year, given that it was looking like an average year, seems to suggest that we will see this growth continue in FY19. And FY19 is also the precursor year to the elections. So from that aspect, we certainly are looking forward to a healthier year ahead. The growth drivers in Q4 clearly have been government spending, which has started again. The impact of demonetization and the implementation issues of GST seem to be dying down. As far as Radio City is concerned, the growth has come on the back of volume increase, specifically in our new markets, where we expanded reach in phase 3, and that seems to be showing traction as far as advertisers are concerned. In fact, our phase 3 stations have broken even in Q4, and we had actually anticipated that they would break even middle of next year. So that's been the second growth driver. The other categories which have shown growth have been BFSI and auto, and again real estate seems to have shaken off the impact of RERA. So real estate has been the fourth category which has increased spends in Q4.
Apurva, like you said, margins and break-even for newer stations is better than your own expectations. So will all of that help you to improve margins in FY19 then?
Most certainly, most certainly. If our margins have shown a growth and reached 36% in Q4, we certainly expect that in the next year, again, our margins, we will deliver better than what we had guided when we had done our roadshows and our IPO. So we had said that our margins would drop to around 31-32% on the back of investments into new stations. We've delivered 33% in this full year. So we definitely expect that margins will go up, and the new stations will add to the improvement in margin, given that they've already broken even. So clearly we see them add to this 33% and grow further.
You've also recently announced the acquisition of a Kolkata station. By when do you expect to close that deal?
So in the April board meeting, the board gave us approval for acquiring Friends FM from Ananda Offset. The transaction still has to be completed because we are waiting for MIB approval, and it's only post MIB approval that we will be taking over control. But I think the biggest thing there is that it gives us entry into the top 5 advertising markets of the country, and it gives us a brand which is already delivering 20% margin. And obviously the moment it becomes part of the Radio City network, we hope to better those margins, but it's already giving us a EBITDA accretive station as part of our portfolio.
All right, so which sectors will contribute towards the growth in FY19, and do you expect FMCG spends to pick up?
So the good news is that radio is not dependent inordinately on one category or one sector. In fact, our spends from most of the sectors are around 8 to 10%. Having said that, clearly government spends have increased in Q4, and we will expect that those spends continue to increase. Yes, of course, FMCG, which typically spends FMCG contribution, which is typically around 5-6% on radio, we expect that to go up for 2 reasons. One is that they have done extremely well, as we can see from the results that have been coming out from most of the FMCG businesses. Also, increasingly, the advertiser expectation and delivery out of radio has started going up. We recently did a research which really said that apart from television, it's radio which is very credible as far as advertising impact is concerned, and the RJs are building a very nice equation with the listeners, which our advertisers are hoping to really utilize. So we do expect FMCG spends also to go up. Apart from that, the usual categories which are high spending on radio are retail, real estate, and auto.
All right, Apurva, thank you very much for joining us here on Bloomberg. Going to wish you all the very best for the quarters going ahead, and thanks once again for joining us. That was the management of Music Broadcast. The stock trading about 1.5% higher or so. The EBITDA margin expansion story is expected to continue into FY19 as well. But with that, we'll move on to the favorite session of this show, at least mine, the chart of the day. The Nifty Equal Weight Index has underperformed the benchmark index this year, and here is Jayesh Khilnani with an analysis. Jayesh.
Shraddha, first let's look at the concept of the equal weight index. What it actually does is all the 50 stocks in the Nifty, those are actually provided a 2% weightage each. So essentially there is no difference between an HDFC or a Reliance or a Coal India. So everyone is on the same platform with a 2% weightage on each of the stocks of the Nifty 50 index. Let's have a look at what has happened so far this year. Is that the Nifty Equal Weight Index, that has given you negative return of about 5.5–6%. Compared to the Nifty's return of about just minus 1% that we have seen for this year so far. Now, why has this happened, or why does the Nifty Equal Weight Index underperform or outperform? Is because the higher weighted stocks on the Nifty, those actually outperform or underperform the index. And in this case, the higher weight stocks on the Nifty, which is the HDFC Twins, Reliance, Infosys and ITC, those have in fact given you handsome returns this year so far. If you can go to the other chart, that will actually show you what I was telling you. Infosys, that has given you nearly 15% return this year so far, with the HDFC Bank about a little more than 5%, HDFC little more than 4%, and ITC giving you return of as much as 4% as well. Now going forward, what is the scenario that we are anticipating is, for that I actually spoke to a few dealers as well, and Chandan Taparia from Motilal Oswal in fact told me that he expects the Nifty to continue this outperformance, given that HDFC Bank and HDFC have recently seen some bit of correction, and there could be renewed interest, buying interest from the institutions as well, which could indeed take the Nifty higher from current levels.
Thank you very much for bringing us the chart of the day. With that, it's a time for a short break here on Countdown. On the other side, we are going to get you the Fab 4 stocks of the day. At 3:15, we will get you the dealing room check and also some closing strategies. So stay tuned in.
Sir, please believe me, I am in this business for the last 12 years. Okay, I'll wait for your call. Thank you so much.
They still don't know you after all these years?
क्या करें? पहचान ही नहीं है.
Simple solution है. List on the stock exchange. With listing comes recognition. Investors get interested in you. And funding happens.
Come on, yaar. I'm not big enough to list. Chal, let's leave.
There's a stock exchange exclusively for your kind of company. NSE Merge. It's the right platform for your business.
Really?
Yeah.
My kind of company?
Exactly. Get listed, get recognized. अरे भाई, हीरे की असली परख जौहरी को ही तो होती है. चल.
NSE Merge. साथ हमारा, सफलता आपकी. The SME Growth Platform from India's largest stock exchange.
White shirts, कितने plain और simple. Fog scent, plain और simple white shirt को बना दे special और fashionable. Fog scent, new fashion wear for men.
Hi guys, we're completing 1 year of the mutual fund show on Bloomberg Quint. Take a look at all that we've done over the last 12 months.
Optically, nothing is cheap. Volatility is integral part of financial markets.
Prices change every microsecond and NAVs change every day.
I have been always suggesting that if you can be Kumbh Karna, invest today and go to sleep for next 14 years.
Join us on the next leg of our journey as we attempt to make the conversations even more meaningful on your favorite show, The Mutual Fund Show.
The Mutual Fund Show Anniversary Special, Wednesday 4 p.m. only on Bloomberg Quint.
Okay, welcome back to the show. You're watching Bloomberg Quint, and half an hour for the markets to go now to shut. But Yash Upadhyay joins us with the Fab 4 stocks of the day. Yash, it will be rather difficult for you to find 4 stocks which are gaining significantly in today's trade.
Yeah, exactly, Darshan, but we have a quite diverse set of stocks today. First up, we have Minda Industries. This one reported a fab set of numbers and is topping our Fab 4 list today. And now their revenues, they have grown by almost 53% to close to 1,400 crore rupees. Their net profit is up 120%, but that is aided by another income element. Discount for it, and still you'd see that the net profit has grown by a number in excess of 60%. That apart, their margins, they too have expanded significantly on a year-on-year basis. Ruchit Soya is up close to 10% today after a PTI report stating that Baba Ramdev led Patanjali Ayurveda and Adani Group have submitted their respective bids to acquire the debt-laden company. Baba Ramdev led Patanjali Ayurveda also has a tie-up with the company, and they seem to be in the forefront, having submitted a bid in excess of 4,000 crore rupees. Forgings is up 9% today after the company said that it would consider the proposal of a share buyback at its board meet on May 28th. And finally, we're also looking at Gravita India. This one has surged as much as 4% today after the company said that it has entered into a contract to supply lead and lead alloys to battery maker Amara Raja Batteries. Now, there is no word in terms of the order value, but they aim to supply close to 8,000 tons of lead to Amara Raja in FY19. Back to you.
Okay, we'll watch out for all those stocks, but an important result that came out today was Motherson Sumi. They met analyst estimates in the March quarter. Let's head across to Yatin Vota, who is in conversation with the chairman, Vivek, Chaand, Sehgal.
Well, the stock in focus is Motherson Sumi, and we have the management of the company. Joining us is Mr. Vivek, Chaand, Sehgal. Mr. Sehgal, thank you so much for joining in and taking out the time. If you could, take us through your fourth quarter earnings performance. And I was looking at your investor presentation, and you said that the fourth quarter revenues were record, and also if you look at the overall order book, that has also been at a record level. So if you could take us through the numbers and your order book.
Yeah, sure. We've hit our highest ever quarterly revenue of 15,282 crores, which is up 38%. Our net profit is up to 24% to 590 crores. And highest ever order book of 130 lakh crores, or approximately 17.2 billion euros. So all around a very strong performance, and great work done by our teams all over.
Okay. Sir, talking about your consolidated performance and the order book, is it more to do with the international operations? So are we looking at some healthy order booking which is happening in the international markets? And going forward into FY19, do you expect the momentum that you've created in FY18, that momentum will be taken forward, especially for your foreign and overseas operations, especially the European and the US market?
Absolutely. I think those markets are very robust. We are not seeing any weakness at all. Very strong traction. But more importantly, even the truck markets are doing, CV vehicles are doing very well. So it's an all-around growth that's happening. We are a bit this thing on the Latin America, but that doesn't constitute a very big portion of our sales. So other than that, everything else is doing very, very well.
Okay. Sir, talking about the standalone operations or the India operations, here also back home we are looking at good growth coming in the passenger vehicle segment as well as in the commercial vehicle segment. So, can we expect a 20-25% kind of a revenue growth in the domestic market as well? And also if you could take us through the, operating performance on that front also, do you think as the content per car increases, we could see some good margin performance as well for the standalone business?
Absolutely. We are a ROCE-oriented company. We've been guiding on ROCE for the last now 25 years, ever since we became public. We are seeing very strong numbers on the standalone side also. I think our customers are doing phenomenally well. So obviously we are in sync with them, and we are enjoying the performance of these companies, and our numbers are also looking that much better and better.
Okay. Sir, talking about your overseas operations, we have seen the setup cost also impact your margins. So by when do you expect normalized margins to come in, and when do you expect these startup costs to start reducing? Will it be from the next 2 quarters wherein we could see some moderation in your setup costs that you incur?
So, one of the very interesting things about Motherson is we are growing on a CAGR of around 29-30% a year. So in one side you want the growth to come up on the top line, on the other side you don't want the startup costs at all. So it's a kind of it's a catch-22 situation. But as far as Motherson is concerned, we only show you what the startup costs are, because once we've supplied, then that particular startup cost is absorbed in our profit and loss account. So we are just showing you that these are the units. We give you every 6 months, we give you the units, and every 6 months we give you the sales. So at this time we've announced the records order book that we have. But for that we will have to set up new plants. We will have to look at these particular things depending upon which order, for what component, for which section of Motherson that has come in. But by and large, our feel is that up to 2020, the most of the capexes are done. Whatever the capex is now that we are talking about would be basically maintenance capexes or some upgradation and things like that. But I think the startup cost is a regular feature. It will remain for, hopefully Motherson keeps growing in the next so many years. So you will always see that one line, but that's basically already written off in our profit and loss account.
Right.
So we are very clear on our fundamentals.
Okay. And sir, talking specifically about SMR and SMP, they have also shown some good margin performance. But in terms of revenue growth, can we expect high double-digit growth to be delivered from SMR and SMP, since the overseas market and the global markets are looking strong for the auto side?
Yeah, definitely. But you see, one particular word of caution. We are very clear that we are not going to buy businesses just to show you top line. So we believe in a healthy bottom line is very important. I think SMR is a victim of a little bit of forex impact, almost about 27 million euros worth of there is a forex impact, because euro has become stronger, so the dollar, the Korean won, the Japanese yen, every single thing, currencies have gone weaker on that. So they have an impact of that. But having said that, our job is to deliver cash in the bank. We say top line vanity, bottom line sanity, cash in bank reality. I think the wonderful performance of SMR is it doesn't matter where the revenues are, and we will, as I told you, it doesn't affect us. But you look at the EBITDA. EBITDA has shown, from 12.1% has gone to 13.1%.
Right. Sir, also talking about PKC, and that is the new horse in your stable, if I may put it so. Is the performance there satisfactory? Did it meet you in terms of the internal expectations, and how do you see that growing moving forward?
I think you just have to see it. I mean, the last Q4 they had a EBITDA of about 17 million.
Right.
For the financial full year, they're at 72 million. So they are doing very well. I think it's work in progress. The Motherson philosophy is that whenever we take over a company, we first go through that particular company with a fine-tooth comb and make sure that all the expenses, everything are taken care of, and whatever is not doubtful, but say we are not confident about it, we will remove it from there. So we've done that in the past 1 year. The performance has been fantastic. They have really become a part of Motherson in all aspects of it. The first time, I think they've crossed their revenues of 1 billion euros. So very strong performance coming from PKC as well. We are sure that in the coming times, the coming year, 2 years, they will do phenomenally well.
Okay. And sir, one final question. Since we had a volatile quarter in terms of, commodity prices being volatile, metal costs being volatile, and the currencies being volatile, do you expect with a lag effect there will be substantial improvement in your operating performance once things on the commodity front and the currency front stabilize? Of course, you have natural hedges, but still, want to ask about.
Yeah, I think.
Yes, so go ahead.
Yeah, I think it's a good question. In Motherson, we will first take all the expenses. What the customer eventually will give us or has given us is already a part of this. The next particular thing will happen in the next round of negotiations that are already ongoing with the customers. So definitely we will expect a pass-through effect to happen. But how much that will be, how that will affect the performance is anybody's guess. But from our side, our job is to give you the number where we have taken care of all the expenses on that particular item and have given you a very fair picture.
Okay. Thank you, Mr. Sehgal, for speaking to Bloomberg Quint, and all the best for the coming quarters. So that was the management of Motherson, confident about growth and a profitable growth moving forward.
Thanks a lot for that, Yatin. That's, the founder of Motherson, Sumi, talking to us. Okay, it's 3:10. Before we move any further and get in Mr. G. Chokkalingam, and in fact take in further questions with both Ruchit and Hadrien, I think it's that time of the show when we try and tell you what stocks could come out of the F&O ban or get into the F&O ban. Navneet isn't here, but hey, Darshan is. And Darshan, have you been able to figure out what stocks could enter or come out of the ban?
So basically, I think there were 5 stocks when we started today. So BML, Dewan Housing, Jet Airways, Just Dial, and Arcom. They are the stocks in the ban today. Yesterday, what came out was a new stock that came in was BML. So I think BML, and according to the total open interest right now, BEML and Arcom pretty much will be in the F&O ban. The other 3 stocks, that is Dewan Housing, Jet Airways, and Just Dial, probably can come out of the F&O ban, and there is a high possibility that Jain Irrigation can come in the F&O ban. I think it's 95% OI limit. Jain Irrigation is currently at 90%, so it can come in. It can come in. It depends, but I think the other 3 counters will definitely come out, and BML and Arcom will stay in the F&O ban. Let's see this tomorrow what happens.
So Jet Airways, interesting one to watch out for individually as well.
All right, gentlemen. So G. Chokkalingam, the founder and managing director at Equinomics Research and Advisory, joins us on the show now. Good afternoon, Mr. Chokkalingam. Thank you for joining us. Tata Steel is one stock which is trading at the lowest point of the day, down about 6.5% nearly now. What is your call on this stock?
You mean Tata Steel?
Steel, yes.
Yeah. I mean, it's not surprising because, in the large cap stock itself, we have seen a host of stocks falling today, 5 to 6%. The market sentiment is a little bad. And also the April production number has come for the industry as a whole. We are still growing at around 4% year on year, the volume. That may not be equivalent to the sales because of late the inventory also is more than the rise in the production. So I doubt whether the industry as a whole is doing quite well in this April-June quarter in terms of steel product sales. So that could be one of the reasons for Tata Steel to show weakness apart from the overall market weakness.
Chokkalingam, do you have any view on Tech Mahindra? This counter seems to be doing extremely well. It's up 40% on a YTD basis from the start of the year. Do you believe it has the legs to go in further? How is it placed fundamentally?
Certainly in the short term, not only Tech Mahindra, even companies like HL Technology have scope to improve because earlier they were not participating in the rally of mid-sized IT companies or even in the what happened in the TCS was not replicated. So now these two companies, it's a time for them to catch up. All of us know that the rupee has been depreciating. It is already down by 6% year to date. It might weaken further because oil is not giving up. And in the absence of a solid growth story from many large cap stocks and also the rupee weakness and oil price rise, I think the entire large cap IT stocks would be very defensive in nature, and particularly Tech Mahindra and HCL can create some kind of alpha also in the short term.
Okay. Guys, there's a lot of movement here, and I want to get in Ruchit and Hadrien in on this. Tata Steel is down 7%. Balrampur Chini has completely given up a lot of its gains, 7.5% down for Balrampur Chini right now. Darshan pointed out Century, which is down 6.5%. And it's not just Tata Steel and Vedanta. Some of the others, SAIL is down 6%, JSPL is down 6%. So metals have taken a serious battering today. Ruchit, maybe you gave a metal idea at the start of the show, but how are the charts looking for any of these names? Large, mid, small, almost all of the stocks are looking under serious pressure.
So Niraj, if I directly come on to the Nifty Metal Index itself, we had seen that recently a pullback move was seen, which had resisted around the 61.8% retracement mark, and again there is a
just
low
stay
top
on,
low.
need to cut across to the cabinet briefing.
इक्विटी भी इसमें रही है, तो आज उनके बैलेंस शीट को रेगुलराइज करना है फॉर ऑन वे डिसइन्वेस्टमेंट, इसलिए 85.21 करोड़ का जो भारत सरकार का शेयर कैपिटल है उसको हम रिड्यूस कर रहे हैं, और उनका जो नॉन प्लान लोन 1.89 करोड़ का उसको फ्रीज कर रहे हैं. ये आपको मालूम हो जाएगा जो आपको प्रेस नोट मिलेगा. दूसरा है विशाखापत्तनम पोर्ट ट्रस्ट. Just to tell you how they have taken loan of only 44.89 crores in the last 30 years. And the penal interest now was to 50.89 crore. Only the penal interest. अब वो परफॉर्मेंस में आ रहे हैं. इस सरकार में आपको मालूम है पोर्ट का मूवमेंट बहुत हुआ है, तो फिर ये उनका रिप्रेजेंटेशन आया था कि जब हम खड़े होने शुरू हुए हैं तो हमें इससे मुक्त कराइए. तो हम लोगों ने भी कहा कि ठीक है आप 44 करोड़ दीजिए. तो आज भारत सरकार ने उनका 250.89 करोड़ जो पेनल इंटरेस्ट था उसको वेव करने का फैसला किया है. तीसरा पारादीप पोर्ट के मामले में है. यह भी कहानी वही है. आपको मालूम है पारादीप पोर्ट ईस्टर्न इंडिया, नॉर्थ ईस्टर्न इंडिया, फ्रॉम क्रोमियम टू बॉक्साइट टू कोल, इसको केटर करते हैं. उन्होंने 387.74 करोड़ लोन लिया था पिछले 20-25 साल में. उस पर उनको पेनल इंटरेस्ट देना था 1076 करोड़. तो ये देश कैसे चला है उसका भी संकेत है. तो आज जब पोर्ट में टर्न अराउंड आ रहा है तो उन्होंने भी कहा कि हमारे साथ न्याय होना चाहिए. तो भारत सरकार ने आज उनके 1076.59 करोड़ पेनल इंटरेस्ट को वेव किया है. बाकी जो उनका प्रिंसिपल है उनको देना पड़ेगा, एंड विद नॉमिनल इंटरेस्ट ऑफ 0.25%. इसकी मोटी बात आप ये समझिए कि हमारी सरकार में हम पीएसयूज को परफॉर्मेंस की ओर प्रेरित कर रहे हैं, तब उनको हम इंडल्जेंस दे रहे हैं. ये सिर्फ इंडल्जेंस फॉर द सेक ऑफ इंडल्जेंस नहीं है. ये आपसे हम कहना चाहूंगा.
Okay, somebody will be listening into this and telling us when to cut back. The changes to IBC and the exact norms, maybe something on the fuel prices as well would be announced, and that will be important. So we'll cut across back to this once the moot points come into question. But Ruchit, sorry to cut you short, had to cut across to the cabinet briefing. You were talking about the Nifty Metal Index.
Yeah, so Neeraj, recently we had seen this index resisting around its 61.8% mark, and again there is a formation of low top, low bottom structure. And usually when we see such low top, low bottom structures, the stock specific momentum tends to get more negative along with rise in volumes. We had seen volumes increasing on the sell off not only in Tata Steel but also in some other counters such as NMDC is there. Even today I have given a sell call in Jindal Steel which has breached its support level. So I think this underperformance or sell off is likely to continue, and the Nifty Metal Index should retest the recent lows of March, which was around 3415, 3410 levels.
Hadrien, do you see more downside on the Nifty? The Nifty index is down about 106 points right now, the lowest point of the day. Your thoughts on the Nifty at this point in time?
Yes, absolutely. The weakness is clearly visible, and we're seeing a lot of selling across the board. And I think this weakness will definitely go ahead. The hourly chart breakdown that I mentioned earlier is playing its part, and I think 10,300, 10,275 cannot be ruled out going forward. So definitely the weakness is going to spill over even in tomorrow's trade.
Okay. Since it's 3:20, let's also get in closing strategies from our experts in light of what they believe the index could do. I doubt they will have a BTST, but you never know. Hadrien, I'll come to you first. If you had to pick one top closing strategy, what would that be?
Yes, that would be a sell call on sale. Again, one of the metal names I have chosen, and I think this we have seen a head and shoulder breakdown on a sale, and I think that's not a good sign. So one can go ahead and short sale May futures and play for a target of 66 to 65 in the short term.
Keep in mind sale, and we'll of course revisit this when Hadrien Johnson a bit later on in the week as well. Ruchit, what about you? What would be your top closing strategy?
Well, even I'll go now short on some metal names itself because of the momentum they are in. So just from a STBT perspective, one can short Jindal Steel again. Although the earlier levels which I had given was from an expiry perspective, but if one is looking just from a 1 day's perspective, then I think tomorrow the stock could test 218 to 220 range. So one can go short at current for STBT, keeping stop about 232 and target around 218.
Does the sharp gash? Okay, just one last question, Hadrien. There's a sharp gash in Balrampur for somebody who had long positions earlier and has not squared those. Would you recommend squaring them?
Yeah, definitely one should consider squaring off because the rally that we're seeing is really not going anywhere. In fact, it is unable to even surpass its near-term 50-day moving average. That is the big hurdle going forward. So I think if you're making money on a Balrampur Chini, which a lot of people have not managed to do so in the past year or so, I think they are lucky, and you should definitely book your profits if you're making in a Balrampur Chini.
Okay, Mr. Chokkalingam, coming back to you, your closing thoughts on the markets and one stock that you would like to recommend at this point in time.
Yeah, we have been saying for last few months that it's very difficult to make money in 2018. We are advising our client to treat this whole 2018 year as year of investments because oil price rise, rupee depreciation, and then other state elections, and also some uncertainty in my personal view on monsoon. Although IMD has forecast normal monsoon, I still remain very skeptical because last 50 years we have seen every third or fourth year monsoon failing miserably, and the last 2 times we had a good monsoon. So all these factors give me worry, and we may not make money throughout this calendar year. But however, the history has proved that the best time to create a wealth is to start investing in a phased manner in a value stocks in the bear market. So that's what we have been communicating to the clients. As far as the investment is concerned, I would suggest one stock, which is Jai Bharat Maruti. It has done phenomenally well in the last 2 years in terms of growth. Going forward, I believe that the growth story remains very intact because along with the Suzuki, Jai Bharat Maruti is also setting up the new plant in Gujarat. So if Maruti Suzuki is talking about increasing the car sales from 2 million to 5 million, that is 2.5 times, I'm pretty confident Jai Bharat Maruti, which is a joint venture of Maruti Suzuki, would also increase its own sales by more than 2 times in the next 2 to 3 years. So therefore, we have been strongly recommending Jai Bharat Maruti as a wealth-creating stock for our clients.
Mr. Chokkalingam, are you buying into any of the OMCs today?
No, rather, I made a mistake of buying little early HPCL at around 360 level. I am not concerned. I am worried about the steep fall, but I am not ultimately worried about the call going wrong because I have a firm view that ultimately oil price would crack, and also the government has shown commitment to the reform in fuel prices. They have not gone back on the commitment. They have been allowing the OMCs to continuously raise oil price, the fuel prices rather. So and also if you look at the results, it is trading at around 6 PE on trailing basis. Even if there is a little pain, I am pretty confident that for current year, it would be still trading less than 10 PE, which I find very attractive in the large mid-cap space. So therefore, I would continue to suggest buying HPCL and averaging the cost.
Okay. So, well, and that stock is down at 52-week lows in the session today. A bunch of other names too have done that in trade. Some final thoughts before we start wrapping up the market. On a bad day, State Bank of India is up 3.5 after the 3.5 yesterday. While we've spoken about it at length, Ruchit, a quick thought here. If you went long on SBI yesterday, somehow had the nerve to ride through those long positions today as well, would you carry home the long positions?
Well, Neeraj, if one has a positional view, then I think one can carry out the long positions, because the way chart structure has panned out since last 1.5 months, around 235 the prices have made a low twice. Once was on I think 21st or 22nd of March, and again on 26th of April. So we had seen a double bottom kind of formation around 235. So the stock has already made a very strong support base around 235, 240. Now yes, the up move since last couple of days is quite sharp, but that should be expected in the PSU space, because the correction in the PSU banking basket was equally sharper. So I think usually since the correction was very sharp, the pullback moves also has to be sharp. The 200-day moving average for SBI is placed around 280 kind of level. So I think if one has taken it from a trading position, in spite of the market fall today, if the stock is outperforming, then it definitely has strength, and in going ahead, it can test levels around 280. So keep a trailing stop loss of around 245 and continue to hold for targets around 280.
Hadrien, Marksans Pharma is another one which is run up over 10.5% today. Would you recommend booking profits in this one?
Yeah, definitely. One should book a profit because there is no any kind of base building that we have seen, which can actually indicate that this momentum can further extend. So I think if anybody is making money, I think it is better to take your money off the table and have a peaceful day.
All right, gentlemen, thank you very much for joining us here on Bloomberg Quint. With that, we are going to start wrapping up the markets, and I'm going to go over to Neeraj. Neeraj, what's happening?
A tick of red across the board is, as you can see, Shraddha. So 1% off for all the key benchmark indices. The Nifty Bank, in fact, is trading at the lowest point of the day, mind you, 0.5% down. So it's not turned out to be a happy hunting ground in there today. I believe the mid caps and the small caps, after some bit of outperformance yesterday, while they may be outperforming, but there is a bit of lull at the mid cap and the small cap end of the market as well. But let me talk about the large caps. Then Shraddha will talk about the mid caps, and Darshan will then eventually wrap up the whole day. Look at what the large caps are doing. SBI 3.5% higher. Techem about a couple of percentage points higher. There is strength in Larsen and Toubro in the session today. Cipla has had a fairly decent day today. All through the day, Cipla has actually continued to do well. And on the losing side though, the gainers are not as important as the losers are. HPCL down 8%, Vedanta, Tata Steel, BPCL. OMCs have been taken to the cleaners. Metals have been taken to the cleaners. ONGC is corrected 5% today. And the Bajaj twins, Finserv and Finance, after having fabulous moves the last few days, are down about 3% in the session today as well. But that's not all. The mid caps, while indices may have weathered the storm, Shraddha, enough and more movers and shakers.
That's right. Minda Industries is the first one, of course. A strong up move on the back of strong management commentary coming in, strong set of numbers. 15 to 20% growth guidance for FY19 is what the management has said. Marksans Pharma is another name. We've seen such strong up move on this counter in excess of 10% after a long time. IDBI Bank, again a strong up move on this one as well. You could call it the SBI rub-off effect. Not only this one, but the entire PSU banking pack is doing well in trade today. Dhampur Sugar, that's seeing some pressure after a sharp up move for about 4 straight trading sessions. We are seeing some pressure, profit booking coming in on this sugar company. Not only this, Balrampur Chini, Triveni Engineering, their entire sugar pack is under pressure. Century Textiles is another one that continues to fall after the deal with Ultratech Cement, which was believed to have happened at the lower valuations. That continues to weigh on Century Textiles, and SAIL is down another 5 or 6% in line with how the entire metal pack is doing. So those are some of the big mid-cap movers.
Okay, let's see what the market is doing, and there are some stocks that I want to point out clearly. These are the stocks that are trading at fresh 52-week low. So if we can pull up REC is down at 52-week low. Aditya Birla Capital, ever since the IPO, this company is not able to do anything itself. It's just been going down. It's down in trade. Surprisingly, CEAT is down significantly. CEAT is at a fresh 52-week low. So if you can get CEAT, one of the high flyers of last time, CEAT is at a fresh 52-week low. Ashiana Housing is down at a fresh 52-week low. And there is Nagarjuna there is a Narayana Rudale, which is at a fresh 52-week low. So clearly, the market's not liking anything. The Bank Nifty now moving to the lowest point of the day. The Nifty has been weak throughout the day, but it's the Bank Nifty that has taken, the toll that is there. I'll be very interesting to see how the Nifty PSU Banking Index has fared in today's trade, because that one was up 5%. It's managed to come down by almost 2 percentage points from where it was at this point of time. The Metal Index and the Real Estate Index are something that, we need to watch out for. And post that, let's get the contribution to see which are the stocks that have led to the rally, to the fall on the Nifty. So if we can get the Nifty contribution, it'll be very interesting. Basically, HDFC Bank had rallied significantly on the expectation that the FI window will probably open. That has not happened. The big boy Reliance is not contributing. ITC as well as HDFC. Remember, these are all large caps which have not contributed. On the contributing side, it was only SBI which managed to contribute. If that was not there, the Nifty would have been down another 20-25 points. L&T Tech Mahindra have been doing well, and Cipla has given up most of the gains. But clearly, this is concerning. The HDFC twins have a substantial weight on the Nifty itself. So if they don't move, expect the Nifty to drift even further. So very important. ITC has a large weight, and Reliance has a large weight on the Nifty. So pretty much the top of these are among the top 4 Nifty weightage, and they actually cracked the Nifty in trade today. So that's what exactly is happening. But we have Mr. Chokkalingam with us. Mr. Chokkalingam, what exactly is the view going ahead? If someone is looking to invest in the market, is this the right time, or should they wait for more correction that could probably come in now?
They should start investing now, because the next negative trigger for the market would come from the Rajasthan and Madhya Pradesh elections. Of course, if oil shoots up beyond $80 and moves close to $90, then we will have a major problem, which I doubt whether it can happen, because I believe that in the interest of OPEC itself, it is not advisable to have oil price beyond 80. Ultimately, the oil demand would come down, the global growth would come down. So therefore, I believe that one should start investing, but certainly one should invest in 2-3 phases till December 2018. So that should be the strategy. All of us know that many stocks have been written down. There are many good quality stocks now available in both the large cap and mid cap. So this is a good time to pick up good value stocks and start investing in 2-3 phases.
All right, Mr. Chokkalingam, thank you very much for joining us here on Bloomberg Quint with your thoughts. Appreciate your time. With that, it's a wrap on this edition of Calm Down. But at 4 p.m., we will bring you the special 1-year anniversary edition show of the Mutual Fund show. So do make sure you tune in. Thanks for watching.